The million-dollar question on everyone's mind is how long will the semiconductor AI boom last? And are we closer to, let's say, the cycle end where all these companies will crash down and, make the retail investors lose their precious money? In my opinion, although I really like Joseph Carlson's and his videos, I think he's maybe off by a time kind of distance. He might be right in, let's say, couple of years time if this continues, because this kind of explosive growth obviously cannot continue for infinite, but at the current moment, I don't think it's fully right. One of the key takeaways from Joseph's video is the comparison to Cisco around the year 2000, where we had the dot-com bubble, and Cisco's PE ratio at the time was around 200 times. If you compare that number to Nvidia's current PE ratio of around 40, although it's elevated, it's not nearly as highly valued as, let's say, Cisco. So I wouldn't necessarily say this is a bubble for Nvidia. It's rather a, expensive valuation, but there's some merits to that. And with these margins that Nvidia currently enjoys, I wouldn't say this is a bubble, but it's more like a highly valued company at the current moment. And we can see that Nvidia CEO Jensen Huang is really talking how much demand is still out there and how customers are, doing everything they possibly can to get their hands on Nvidia's H100, H200 and other up-and-coming Blackwell series chips. And we can see that the other player here, AMD for example, Lisa Su mentions that the AI supercycle is just in the beginning, and we can actually see in, for example, TSMC's monthly revenue. TSMC is the sole manufacturer, or at least the main manufacturer for Nvidia and AMD, but also the likes of Broadcom and so on. And TSMC has a monthly revenue table here that we can see for 2024, and there's strong year-over-year increase on essentially every single month of this year till August. You can see that in August they had a 33% increase compared to the same period of 2023. And interestingly, if you look at the, for example, fourth quarter of 2023, you can see that Nvidia's revenue, TSMC's revenue mostly came from high performance computing and smartphones, an actual equal share of 43% of their revenue coming from each of these two different segments for TSMC. Obviously for smartphones is mostly Apple's iPhones and I would say iPads. We can see that also in that includes, for example, Qualcomm that makes the Snapdragon series for Samsung and other Android players. But the interesting comparison here to be made is look how much the smartphones and the HPC segments change. So just half a year later, we can see that the high performance computing is now 52% of TSMC's increasing revenue, and the smartphone is only 33%. So I wouldn't say the smartphone, maybe the smartphone segment has stagnated a bit, but the HPC has not for sure. And the interesting part for me is also looking at the other indicators out there. So we've seen TSMC's monthly growth. We can see that TSMC is also doing essentially a super hot run order with the fab and tool makers for CoWoS packaging. Remember that CoWoS packaging, chip on wafer on substrate packaging, is a manufacturing process for these AI chips. These AI chips are very large, so it requires this step of CoWoS packaging. And we can see, according to other industry insiders like Daniel Ninstedt, he says that TSMC plans to have a CoWoS monthly capability of 65,000 units by end of 2026, which is essentially a 50% increase on annualized rate over the past, let's say, 4 years from 2022 until 2026. You can see here that in my own calculations, for example, TSMC's own CoWoS capabilities was around 8,000 wafers per month by summer of last year. They increased it to around 11 or 12,000 by end of 2023. And then in the summer of this year, we are around 20,000. Now remember, these numbers are not fully exact. It could be, 10 or 15% on plus or minus, but it's just in the same ballpark, I would say. The important part is to know that by summer of 2024, we are around 2x of summer of 2023. And the highest estimates I've seen for 2024 December is over 35,000, close to 40,000. But I went with the, let's say, the lower end of that scale at 32,000. But still it shows in essentially 1 year and a half, a 4x or 3x compared to the summer of 2023 of, CoWoS wafer output capability, which is mostly going to NVIDIA, but also increasingly to AMD as well as Broadcom, as well as Marvell, Alphabet, and so on and so forth. And we can see that, by end of 2025, I had 65,000. Maybe I can change this to 2026, but it doesn't matter. It's just like an insane close to 10x increase in 2 or 3 years in wafer output capability, which we know most of those wafers are obviously going for the high performance computing of TSMC's revenue, which is coming from NVIDIA and AMD and Broadcom and Google and so on and so forth. We can see also that, in my opinion, the interesting part is that look at, for example, one of TSMC's customers, AMD. We can see that on their revenue, we can see their total revenue divided by, for example, their 4 different segments. AMD's revenue has stagnated until 2023 late, but then it starts to increase because of the blue part of their revenue. So their data center, which is again the AI mostly, is start to increase. We can look closely here. AMD's data center revenue is divided by their AI part and their traditional general purpose CPUs. And here we can see that although the EPIC line, which is their general purpose CPU line, illustrated here on the red bars, is kind of slowly increasing quarter by quarter by a couple of percentages every quarter, steadily though, very nice increase. Their AI part that started, let's say, in Q4 of 2023 is much more explosive. So their revenue of Q4 of last year was 400 million or thereabouts, and we can see that already by Q4 of next year, they expected to 10x that monthly revenue run rate. So everything I see out there, the CEOs of NVIDIA and the CEO of AMD talking about insane demand, that the lack of, capability of putting the chips out there, because no matter how many they make, the customers want even more, right? You can see TSMC's indicators like the monthly revenue going up. We can see that comparatively more and more of their revenue goes from, let's say, everything else to high performance computing, to the point now that in the last earnings, more than half of their revenue came from high performance computing. We know that those customers of this high performance 52% revenue of TSMC are mostly like NVIDIA, AMD, Broadcom, and even Google and so on, Marvell. And those companies have also, increased their revenue very steadily, and seem in their guidance to point to the fact that we are not at the end, at least in my opinion, currently. We can also see that, for example, that AMD specifically are, to be honest, just in the beginning of their ramp up. So I personally don't expect any AI bust until, let's say, the closer to the second half of next year. But again, we don't know. It's possible that, for example, what NVIDIA CEO says is just, to calm down maybe he knows that the demand is completely dying off, in the second half of next year, but he has to, for example, make sure to not hurt investors and keep the stock price up as much as possible. That's one way to look at it. I don't think that's the case, because that wouldn't maybe be fully financially legal and would bring upon NVIDIA and Jensen Huang a lot of troubles down the road. And also, if you look actually at my estimates for example, both NVIDIA and AMD. Let's start with the smaller one, AMD. You can see that AMD's full year of 2024 revenue of 5.4 billion, solely based on their AI data center segment, right? So remember, I showed you, for example, AMD's revenue here on data center, and you can see the blue line. So the blue line is essentially what I'm now showing you here at 5.4 billion for 2024. So not all the rest of AMD's revenue, only the segment of AI in their data center. And you can see for NVIDIA is, let's say, around 93 billion or so. Actually, I have the numbers here. You can see here that for NVIDIA in Q1 of this year, they had a total AI revenue of around 22.5 billion. And they also had 19.3 in terms of a pure GPU part of, because around 3 billion of that was for their networking. And you can see that those numbers are around, now well over 20 billion by Q2 and closer to 30 billion by Q4. So that would go to, let's say, summarize it to 94 billion by this end of this year. And as you go into next year, you can see that AMD's revenue most likely will double and maybe even more to 13 billion, 14 billion. Let's say at the lowest end of this estimate, closer to 10 billion. That's essentially a doubling for next year. And Nvidia, although not a doubling, they will, they will increase their revenue by 20% or so, maybe 30%, and by tens of billions. I'm not really agreeing with Joseph though, although I really love his channel. I think he's very well put video. I think he might be right in the long run, but I'm not sure that this is, the peak of the peak. This could possibly happen, let's say, at the bare minimum 6 months from now. Maybe we start to see some signs. But right now, I haven't seen any signs. It doesn't mean, to be honest, that Joseph is wrong. He could be right even now. But right now, when I look at the data out there, I don't believe that that is the case. For example, remember that we showed you the comparison to Cisco. Nvidia stock price is only trading at 55 PE ratio on a trailing 12 months and 44 to 45 PE ratio on the, let's say, next year's basis. So I don't honestly think this is, the time where the AI cycle will bust, unless there's a general market crash based on, the US economy facing troubles. That could be one case, or maybe the rate cuts start to introduce more inflation into the economy on a macro level. We don't know. But based on the pure technical, AI supply chain, I don't believe that's the case. So thank you for the video. Please like and subscribe and share your ideas in the comment section, and see you in the next one.